Hey everybody, Christopher K. Smith. This is my FibLines quarterly update for March 11th, 2018. So here's a standard disclaimer regarding trading products. Don't trade with money you can't afford to lose. Be careful. So here's a quick overview of our presentation today. I'm going to give an introduction to the FibLines indicator. What is it? How it works. I'm going to review where we are in the stock market in general. Take a look at some of my favorite symbols through the lens of the FibLines indicator, and then wrap it all up for you. I'll do that in just under 15 minutes. So first up, what is FibLines? FibLines is a technical study that you can apply to basically any chart or financial market. And it's based on the Fibonacci retracements indicator that I've here. This is a Thinkorswim platform, by the way. You click down here in the bottom under active tool, select Fibonacci retracements, looks like this little percent sign indicator. Basically, you pick two areas on the chart, let's say right here to down there. And based on the areas you pick, you might notice some amazing symmetries, like for example, price spiked up right to the top of this line here and then pulled back, and you'll find other prices behave similar to those lines in the future, or finds area support and resistance. So the Fibonacci retracements, basically you have to identify the initial move between the 0 and 100% lines, and then the Fibonacci retracements draws lines at 161%, 261%, and 423% of that initial move that you selected manually. And you might say, Chris, why did you select these two dots and not these two, or not these two over here? And that's where the interpretation part of the FibLines indicator comes in. It's a combination of the Fibonacci retracements, but embedded in the indicator are the values of this 100% line for all the different symbols that are supported. So when you do that, you can, let's take off the manual drawing that we put on. And we're going to add the FibLines indicator. When you do that, you'll notice that the lines are drawn on the chart automatically. So the red lines are drawn automatically, and if you zoom in, you'll see that we have another level of lines. Orange lines are drawn at the 0.32 and 0.638 and 0.62 intervals of those larger lines. And then other lines are drawn at a level below that. And you'll find very often these lower lines are also area support and resistance that you'll find on a smaller time frame. So that's what the indicator is. It's based on Fibonacci retracements. It draws lines at up to 4 levels of depth, and the lines are all calculated based on the favorite symbols that we like to look at. So let's go ahead and look at some of the changes I made in this update. I do one of these updates per quarter. So first up, we're going to look at the QQQ. Actually, first, let's look at the stock market in general and see where we've come with it. And so we looked at the FibLines. So it's, again, it's part Fibonacci retracements, and it's part Elliott wave, and it's based on mathematics and an interpretation part of it. So again, you could take that Fibonacci retracements and draw it on all your favorite symbols yourself, or you could apply the indicator where I've basically done it for you. So for a more detailed introduction to FibLines, go up on YouTube and search for Introduction to FibLines, and I'll take you through more of the details of it. So taking a look at the stock markets in general, we can see that the Dow, the Russell, and the S&P are up in the neighborhood of 2.5 to 5% so far year to date, whereas the NASDAQ, QQQ, is up over 11% year to date. Stepping back even further, we can see from the election of President Trump back in November of 2016, stock markets had an incredible run. The Dow's at 42%. The IWM, the SPY is in the neighborhood of in the mid-30s, and the QQQ is measured. The NASDAQ measured by the QQQ, the NASDAQ 100 is up over 51% in that time. So it's certainly been an incredible run. And so if you think the market hasn't been easy so far this year, it's been a little more volatile for sure, but we still had an incredible move, and it's certainly normal to see some digestion after a move of that magnitude. So taking a look back at the FibLines, so the QQQ is one of the symbols that we reinterpreted in this quarterly update, and taking a very longer term view, looking all the way back to the financial crisis back in 2009. A lot of the earlier interpretations of FibLines I had were based on this initial move down here. And you see that we've run the 423% line on that. We've gone through those, had this period of consolidation. And so this interpretation of Qs is based on a much more recent high and low period that we had here in 2016. We had a sell-off in early 2016, and then a rally up after that. And now you can see we're moving ahead there. So, and one of the great things about FibLines is not only going to give you short-term areas of support and resistance, it also gives you targets. So you can see in the QQQ, I have a target up here at $192.06. That means that we expect the price to get to that point before it goes through another significant period of consolidation. Okay, next up we have, let's see if I can find some other ones here. We have the CBOE. Exchanges have done incredibly well. CBOE and CME have both done incredibly well. See if I target up CBOE at $160 a share. A couple of major Dow components were reinterpreted here. Boeing BA's really had an incredible run, and we see just based on this high and low period that it had in early 2016, it's run the full 423% move and topped out almost perfectly here at the 423% line up here at $369 a share. So Boeing's had quite a run. Caterpillar has as well. And next up, Dow, DuPont, and DWDP. Those two companies merged, and that's now the new combined ticker. And you can see they bounced almost perfectly here up the 423% line as well. So a lot of these Dow components kind of spiking and reaching some peaks. Next up in the financial space, we have Visa and MasterCard. V and MA both reinterpreted in this release of the indicator. For MasterCard, we have a target overhead here at $197 a share at $183 right now. So these financials have really done incredibly well. You know, consumer-based financials based on credit cards and stuff like that. Certainly better than the more traditional financials, like your JP Morgans and your Bank of Americas and whatnot. Apple. Certainly a huge tech stock here. This was kind of moving around the 423% line and finally broke out and moved higher, so I reinterpreted that based on a more recent wave one. And you can see we have a target in Apple of $226 a share. So Apple certainly relatively not as high flying as some of the other NASDAQ stocks, but you know, huge market cap and certainly a great company with a great ramp ahead of it. And also, I think what they're going to benefit from tax reform. Obviously, every U.S.-based company is, but they're also going to bring a huge amount of capital back into the U.S. with that repatriation plan, build a second headquarters. It's quite a bright future together for Apple, I think. And again, a target here of $226. Amazon. Amazon is my single favorite no-brain trade right now. You might say, really, Chris, aren't you late to the game here? Well, I guess I could be kind of, but I was looking at this thing through the lens of the FibLines, and you could see here we had a 100% move, nice bounce off the 161, and it's just been straight up ever since. So taking a look at the long-term target of Amazon, I see easily $2,000 a share. We're here at $1,997 a share. So this is the kind of analysis you can do with FibLines you can't do with more traditional charting. So I think $1,580 a share, it's pretty much a no-brainer. We're going to go to 2,000, so that's almost 450 points worth of movement. I'm already up about 100 points on this. How do you trade a stock? It's $1,500 a share. Well, a couple ways you can do it. One is just buy very few shares. I have a small account, just a few $1,000s in it. I picked up one share recently, and I'm up about 100 points on $100 on it. You could do that. You could buy an in-the-money call spread. You could buy the 1,500 call, sell the 1,600 call, maybe out in June or something like that. It'll cost you about $5,000, and you could possibly make as much as $5,000 out of it. So there's various ways to trade it. You can also sell puts. A little extended here. You may not want to just jump into the long side, but if you see a stock running up every Monday and they consolidate the rest of the week, that's a sign it's surely being accumulated, and Amazon certainly falls in that category. So single favorite no-brainer stock to the upside would be Amazon, AMZN. Chip stocks have been on fire. I don't think I talked about Intel. I think I wanted to. INTC Intel. Yeah, so I reinterpreted Intel. Looking at a very long-term chart in Intel. Unlike the NASDAQ, it didn't get out to its old year 2000 high. It's been kind of grinding away, but just recently here, we had a pretty meaningful move to the upside, and finally gapped up on this earnings report here, moved back and forth. So I went with a tighter, more recent wave one move right here. It's like 43 to like 47. And notice we shot up right to 161% line and deflected off of that, sold back down to the 0 line. So that was a sign that my interpretation is is valid, even though it's very short, much shorter term in nature than I usually like to do. So you can see that with Intel we have an upside target of $61.68 a share, and I think it could get there. The chips in general have just been on fire lately, and Intel's been a bit of a laggard. So, for instance, take a look at Texas Instruments TXN, all-time high here recently. It's kind of sitting right here at the 423. Haven't reinterpreted that one yet. XLNX LNX also been on fire. Reinterpreted that one here as well. So chip stocks look good. I think Intel's a pretty good bet to the upside here. You could sell some puts, you could buy some stock, all kinds of different ways to play that. One of my favorite social media stocks, I like Facebook. I've held that one for a long time. Had a really good run on this. Did a call spread, kind of traded around it recently. I'm still holding on to that. Going to probably close that out and reestablish that a longer term, maybe like an 80-90 call spread, something like that, and just trade around that. Other in the stock social media space, Twitter, TWTR. Been a dog for the longest time. Finally starting to show some signs of life. IPO price up at $50 a share, went down, was a dog, just basically forever. Taking a look at the fundamentals, if we go to over here at Friend Tall Chart 2000, we can see that Twitter's just finally had a profitable quarter. They finally reported some positive revenue, so they're finally showing their ability to monetize the platform. Trump's certainly helping them there. So Twitter, I think, is pretty fair to say we're going to get back up. Got some short-term resistance right here. This is a downside interpretation of the FibLines, by the way. You can do it in the down direction as well as the up direction. So short-term, a little bit of consolidation here at the 35 area, but I think you have a pretty good easy target of $50 a share on the upside with Twitter, and that'll just be getting back to some of its earlier levels. Snap, I don't have as much confidence in. I don't know if they're going to be able to monetize the platform. The recent update not being received so well, so I'd hold off on Snap. But I think Twitter's, I don't love the company, I don't love the product, but Chart's looking better. Other internet-related stocks, PayPal, PYPL. This is one of my most successful symbols. I've traded with FibLines. I've picked up much earlier in this run based on moves off FibLines levels. It hasn't recently made a new all-time high. I'm thinking about, although I did recently add some, I'm thinking about swapping out of that and into Square, also in the internet payment space, which did recently make a new all-time high. Broke out of this recent consolidation area. And the target of Square would be $73.78. So this looks a lot like PayPal did, like last year at this time, breaking out to a new high. I could easily see a Square up here in the $80 to $100 range a year from now. So, like Square to the upside, probably going to pick some up next week. Finally, Bitcoin GBTC. This had a 90-for-1 reverse split recently, so this used to be in the $140, $150 share range. They split it, presumably to make it more affordable to smaller investors. So you could see, when I first interpreted it, we had this huge spike to the upside here, which really went well beyond the 423% line, but really didn't last very, very long. That's one of the things about moves above FibLines. I don't really take them too seriously unless they last for a while or if they come down, and then they show further movement to the upside after getting reflected off the line. In this case, this move was just a complete spike and hasn't been maintainable. And stock sold off, came over and rolled over to the downside. So GBTC, Bitcoin, cyber currencies, I think we can easily see this back down to the $10 range, and eventually down to $6. So I'm bearish on Bitcoin, although I was never really a bull in the first place, but that's my take. So that's it. So just to wrap this up then, I have a couple indicators you can get up on the FibTools sell store, both for the Thinkorswim platform. So go to fibtools.sells.com. You can get the range bands free indicator for Thinkorswim. That's a universal trend following indicator that works basically on any chart in any time frame. And if the symbol makes a big move, you're very likely to be on the right side of that move by following this indicator. The FibLines free indicator, which is the FibLines only for SPY, DIA, QQQ, IWM, ES, YM, and NQ, the futures, and the big ETFs. That's free for Thinkorswim. And that was recently just updated with the new levels for QQQ. And then you have the full version of the FibLines indicator. It costs $99 for 4 years, 4 quarterly updates. That includes support for about 200 symbols in this indicator, and all the popular stocks that you follow, the Dow 30, the NASDAQ 100, the dollar index, gold miners, the major futures, select sector ETFs, international ETFs, basically all in there. That cost $99 for 4 quarterly updates, and that's a bargain compared to what my competitor charges for essentially the same thing. So that's it. You can get those up at fibtools.sells.com, and that is pretty much it. So thanks very much for watching. Good trading, all the best, and we'll catch you at the next quarterly update.